now. All right, everybody, how we doing out there? Doc Severson with you here, Ready Set Crypto, and from the left coast, so we got Mav out there in Los Angeles. Hello, everybody. Good to see you guys.
Hey, guys.
Little bit of excitement in the markets today, eh? All right. So you guys are a few seconds behind our stream, so we'll wait for some of the comments to come in. Love to see where you guys are coming in from today. I am coming to you live from Westerville, Ohio, soon to be Greenville, South Carolina, as of next week. So I am surrounded by cardboard. You just can't see it. Everything is in a box. So lots to talk about today. Looking for your questions, your comments, your concerns, and we got a lot to share with you today. So Mav, what you got out there?
Sorry, I had like another browser window open. I couldn't figure out which one was playing music, and it's a Wednesday. So I got a little bit of a talk to kind of address some of the things that are going on right now and how to sort of better react to what's going on in the market right now, and just kind of what I'm seeing from a macro perspective. So I'm going to switch over to Death by PowerPoint. That's okay with you guys, and we're going to dig right into that.
Oh, do it.
Yeah, one sec here. Always a transition. All right, cool, excellent. So, all right, so what's going on with Bitcoin? That's what everybody's talking about today, and I'm here to sort of assuage some of the fears, sort of help you guys understand what it is more than just the price, because Doc often talks about the price, and that's very important to talk about. But what I get sort of more concerned about is what's happening sort of at the broader scale. What's happening at what's going on with the global economy? What's driving the forces behind what is going on with Bitcoin? Because like it or not, it is intrinsically tied to what is happening in the larger scale of things right now, for better or worse. So if you guys haven't been paying attention or haven't seen it, it's not good out there today. We clearly have the fear and greed X is somewhat subjective, but since they've been tracking it, we're back to pretty much right where we were post ICO bubble burst, or maybe even right before the ICO bubble took off. Very, very scary times. That's a very significant drop there in terms of just the overall market confidence. But just going beyond that and looking at the price and looking at the shorts and all the things that are going on just for the entire crypto market in terms of the numbers themselves, it's not there's not a lot of green out there right now. And that's it can be, we sometimes often hear people say well, this is a buying opportunity. Yeah, this is what you guys have been waiting for. What are you talking about? Buy when there's blood on the streets. Okay, cool. But help me better understand what is going on right now, because this doesn't feel like just another one of those, oh yeah, it's a flash crash. Because if you look, I meant to put this slide later on. I apologize, but this is actually a good transition. If we look, we can see that Bitcoin is starting to not really play by the rules that it started to get painted as in terms of a hedge, or sort of this inverse correlation ratio against the US dollar and gold, and just a lot of these narratives or the rhetoric right now is about Bitcoin being a safe haven asset. And if it's breaking against that, then it's kind of failing at that job or its new role. If it really intends to be digital gold, it needs to have it needs to stand on its own. And if it's not doing that, if it's breaking away correlation like that, then there's a pretty strong argument that it's the inverse relationship is broken down, and that's not good for its new standing as a safe haven asset. So, and yeah, the big news today is not just about Bitcoin. It's about the yield curve inversion. Jeez, that's a hard one. And we can see that the entire market is just in upheaval right now. So there are really no safe havens except, hey, what's that? Gold seems to be doing pretty well. So we'll get to that in a sec, but I did want to give a little shout out to Secretary Wilbur Ross trying to come on and ease the rustled feathers in terms of like, oh, it's okay, don't worry guys, it's not as big of a deal as some people are making out to be. I think it's a pretty big deal, and I think the market's reacting as it should, because we're seeing more and more and more of these red flags that were pre 2008 or just pre-recession type flags that indicate to us, hey, there's stuff isn't good right now. Maybe it's time to go risk off and move into something that is risk averse. Hence gold. As we can see, gold and silver are just crushing it right now. And as people are looking for, like I said, safe haven, looking to sort of hedge against the global economy, hedge against risk, hedge against the runaway race to the bottom central bank policy that seems to be like just about printing more money. Right now we are in a period where it's very clear that gold is serving as this just absolutely unstoppable beast in terms of just hedging against risk, as in terms of it's what people want right now. But at the same time, as Delphi Digital pointed out, it's extremely overbought right now, and so we are even getting to the point where the safe haven assets are overbought, which is just, this is not good. Like there's you're starting to look for breathing room, and there's all the air is running out. So it is very concerning in terms of like what do we do? Where do we go from here? How do we better respond to the market uncertainty that is quickly approaching? The global economy seems to be moving in a lot of different directions at once right now, and I think people are just asking, what do I do? So that's why over the past month there's been this like a constant narrative about how Bitcoin is sort of this new emerging asset class in terms of its safe haven aspects, and it's the new gold, and it has all these intrinsic properties that make it very good for hedging against global risk, hedging even against gold itself. And we've seen that they've starting to be strongly correlated to each other. And we'll get to that correlation in a sec here. But what is clear is that as the market becomes more uncertain, as global forces become just crazy, people are looking for alternative asset classes that they can park their capital in and know that they're going to be okay for the most part. But at the same time, what's been clear over the past couple months, and certainly today, as I was talking about earlier, that correlation is starting to not really show that there's like it's not this very strong. There's still a correlation, but it's not as strong as some people might put it out to be. If you hear the term digital gold, you might assume that, oh yeah, well it's going to mirror what gold does, or it's going to do almost exactly that, and that's not proving to be the case. There is still some Bitcoin is still kind of wild. It's still kind of out there, and it's proving that it's more than digital gold. It's proving that it's still in that sort of transition, awkward teenage year period where it's still trying to figure out what it is. It's still trying to prove that it is alternative asset class. People know what gold is. People understand that gold is a store of value, and that's it. But Bitcoin is sort of this anomalous, I don't know, just it's many different things at once. And then at the same time, it's not really money. It's not really a store of gold. It's so volatile. It's not really commodity. It's not really a collectible. It's all those things at once, but also none of those things at once. It's kind of this just crazy new sort of space, this new sort of thing that we haven't been exposed to before. So the market is still trying to understand how to transition that speculative value into utility value, or a store value. So moving on, I think what is important here is that as we see market moves like we were seeing today, that we keep the larger perspective in mind. If you don't, you're going to get scared by moves like today if you don't keep that in mind, because you'll lose sight of what is truly important in terms of what Bitcoin is serving as a hedge against. As it has been, as I talk about this more, as we see central banks start to move us towards negative interest rates, as we start to move towards just money printing ad nauseum, like it is very important for us to serve as this global hedge, because here's a great couple quotes from this paper that was submitted to the IMF. The combination of money inflation and the suppression of evidence on the effect of those prices is now the backbone of monetary policy. That's crazy. We're entering this new era that I think it transcends our traditional sense of boom and bust and how things have worked in the past. We're going into a place that we've never been before. And this, I think this is also, if you guys haven't read this, the Coinmetrics State of the Network report, it's fantastic. And it does a really good job of succinctly pointing where we are right now in terms of Bitcoin versus gold versus the global economy. And, especially pay attention to this middle paragraph right here, because it just sums it all up. Faced with the softness of the latest macroeconomic indicators, widespread inversion of the most developed world economy yield curves, like we see today, negative nominal interest rates, which we'll get to in a sec, and a persistent inability to achieve central bank inflation targets, as we've seen with the Fed cutting rates, a persistent, falling inflation expectations by market participants, and the possibility of a full-blown U.S.-China trade war, the Fed is once again leading the way in easing monetary policy. And that's where we come back to, is the fact that we are going down a road where this is going to be very messy. And the sort of hedge that Bitcoin presents cannot be overstated. So yeah, where do we go from here? How do we respond to this? Does it still make sense to treat Bitcoin as sort of this digital gold, digital hedge, global hedge against monetary policy? I think so. And I think we're still proving that, but I think we're trending still in the right direction. And again, I want to make sure it's clear that we go beyond just digital gold. What Bitcoin and the larger crypto space represent is an alternative asset class that does provide value by its inherent ability to have very clear value attributed to what it is. There's a one-to-one correlation. One Bitcoin equals one Bitcoin. There's no there's no inflation, or there's no central bank
we're not going to do a stock split on there, are we?
Yeah,
anytime
exactly.
soon?
We don't have rehypothecation and commingling. We don't have a lot of these crazy Wall Street type things. There's only going to be 21 million Bitcoin. That's very important. And I hope that I want to summate that right there. And some of these quotes here from some recent articles are great. The opportunity cost of holding Bitcoin grows by the day, especially as the long-term outlook for conventional asset classes looks more bleak. You can't, and this next quote kind of refers to negative interest rates, and I'm going to be making a video on this pretty soon here. But basically, if you can't withdraw your money as cash, you have two choices. You either deal with negative interest rates, or you can spend your money. And hopefully that kind of starts to get you thinking about all right, so where do people go if their bank isn't where they should be holding their money in a negative interest rate economy? It's towards more and more risky assets. It's towards more and more speculative forms of holding value. So Bitcoin is one of those. And the wealthiest among us know how to avoid the problem of sort of this runaway monetary policy easing race to the bottom. It's the accumulation of assets. And that's the other thing, is that we have to look at something like Bitcoin as an asset, as something that is going to return value to you over time. So this is last slide here, and then we'll get to talking a little bit about the charts. But hopefully this is from a recent report from Grayscale regarding sort of using Bitcoin as a hedge against the US-China trade war. And it's simply because these things we already know. It's got store value assets, or sorry, characteristics. It is very similar to cash, but different. And it's got growth technology, characteristics. I keep messing that up, of a new technology. And that's a very important aspect because, like I said earlier, gold is gold. It's just a shiny rock. It's not going to do anything new or interesting. It's just going to continue to hold value. But Bitcoin can grow. It can change. It can be built upon. It can do many new things. It can be part of this new technological renaissance that we're about to embark on. And that's really exciting. So hopefully that starts to paint the picture of like, don't worry about small scale drops in the market like today, because the longer term time frame is what matters. So, okay, all right. We'll get to the charts in one sec, but I do want to mention that like this is something that we talk a lot about in our Omnia service. We're all about sort of like the larger perspective in terms of how can looking at things from a macro perspective and even a micro perspective help us better understand the market and where it's going, and better learn to be traders and better investors and just understand where crypto is going. We want to be the investor education platform of the new digital economy. We want to empower you to do the best you can so that you can go out there and invest in the future. That I think is like the coolest thing out there. So anyways, if you want to join us, just go to readysetcrypto.com/gold. We're starting to slowly roll out annual plans. So like, it's kind of cool if you want to sign up, but if nothing else, come check out our site. We've got a free newsletter as well. And I'd love to have you as a part of our community. But yeah, I'm gonna transition back, get away from death by PowerPoint here. So, all right.
Well, a lot of great questions that were asked in there. So, like, let's start off with this one. So, today was the first day since 2005 that we had a yield curve inversion. So, all of a sudden, everybody's freaking out, right? Like, holy crap, what's going to happen tomorrow? Don't forget that the last time we had one was 2005, and it took almost 3 years before that translated into a full-blown recession. So the fact that we have been playing, these monkey games with financial policy with the Fed and the ECB and everybody, all the central bankers are complicit in this, is no surprise that we have rates driving down. And more than likely, we're going to be at negative rates before long. Even Greenspan said that much.
Yeah.
So Greenspan actually did famously predict the last recession in the beginning of, actually it was 2007. Beginning of 2007, he started talking about the next recession, which of course really took at least another year before that kicked in. So a couple of takeaways that I have for today is like, everybody needs to calm the F down, I think, first of all, because, okay, so the S&P 500 dropped 3% today. We have Bitcoin, which is down 6%. 6% in Bitcoin is like no big deal. Don't forget where the charts are too. This is just a weekly consolidation pattern. And we're going to see things fly around inside of a weekly consolidation pattern, right? Within that, it's, the analogy that I always use with something like this, and I wish I could draw this out, is that if you take your dog for a walk, say you weigh 200 pounds, you're walking a 20-pound dog, right? You outweigh him by a factor of 10 in terms of your mass. So what's going to happen is you're going to walk from point A to point B, and you represent the larger time frame. But meanwhile, what's going to happen is the dog represents smaller time frames. It's basically going to orbit around you. At least my dog would, just untrained, no discipline whatsoever, all over the place. But we will start and end in exactly the same spot. So a lot of people don't understand the power of watching the larger time frames. Right now, the larger time frame in BTC is doing exactly what it should. And we're very close to getting ourselves in position for the next trend to spring off of here. Will it be to the upside or the downside? I don't know, but the price will tell us which. Price will tell us which way it's going. I still give the odds to the upside at this point. We haven't seen any reason, any change in polarity on that weekly chart to feel that we're going to be dropping from this point. Now, altcoins, we've been talking about altcoins on this program for the last few weeks. Every time we bring one up, it's like these things are in a death spiral. And the problem has been also with the fact that BTC is going up. That's in your denominator. It's affecting your currency pair. Is there going to be an alt season? Maybe. I mean, we're getting to the point these days where alts are so bloody cheap that it's like a home run trade, right? It's like a lottery ticket buying, 100 coins or 1,000 coins on an alt. It is going to cost you a few bucks. It's like, why not? So we're not going to tell you not to do it. It's just a very low probability trade, right? So you got to start looking at the bigger picture of what's going on here. And let's see what are the questions we have.
Yeah, I guess if you guys wanted the Cliff Notes version, if you're just tuning in to what's going on today, the basic answer is that whenever there's like a lot of fear in the market, people know that gold and the U.S. dollar are sort of risk off, like things that they can move into that are known stores of value. So they're going to move away from something like Bitcoin and other crypto assets. That's it. That's as complicated as it gets. So don't worry. It's okay. This is just another one of those like symptoms of us being an emerging asset class. But to me, that's fine.
I got like 5 points I want to share with you guys, and I'm going to do this in a non-PowerPoint format. So I'm going to be a little out of my element here, but bear with me here. So first of all, if and when we have a crash, today to me is not a crash. This is just a red candle. This is just distribution, right? It's just distribution. It's just a negative day. If and when we have a crash, there is no safe harbor. If you go back and look, everything got nuked, because what happens is when there is a true crash, everybody gets margin calls and redemption requests and everything like that. And everybody from the financial services on down to the retail trader is scrambling, trying to raise assets, trying to raise cash so they can pay off their obligations and, just go to cash and just go clean. So everything gets dumped at the beginning. This is not a crash. This is not what I'm talking about here, because tops, this leads to my second point, tops are a process. For getting to a top in the market, notice what happened back in January, February of 2018, right? Got very, very volatile before it started to release to the downside. I mean, it bounced almost all the way back up again before it released. So we're not even there yet. We haven't even started that process for us to call this a top. We're still in a weekly uptrend, right? So tops are a process. These things take a while. And that leads to my third point, which is that the worst selling always occurs at the very end. The worst selling in a bear or any kind of recession always occurs at the very end. And this is where people that are holding their breath and trying to make it through the storms just can't take it anymore. And it happens in a rush. It happens in a flood. And that will be a period of maximum opportunity for those that keep their heads on straight. So there is never a shortage of money in a situation like that. It's just a big shell game. Money just shifts from one place to another, and institutions that control trillions of dollars are just looking for yield, wherever that is. And you'd be amazed at the places that they find yield. Yeah, it'd be nice if they'd shift a little trillion into crypto, but it needs to grow up a little bit, but it's doing so day by day by day. So the last thing I want to say to you guys is ignore the pundits. Ignore everybody that's out there that swears to God they know where price is going to go tomorrow, because they don't. Nobody does. Nobody understands what's going to happen tomorrow. Nobody got it right back in '08. Nobody did. Nobody got that right. Right? Nobody predicted any of these recessions. Nobody predicts any of the bears, because it completely goes counter to every impulse that's part of us as human beings. So the more uncertainty that's out there, the more sources that you're probably going to read. And what that creates in you is confirmation bias, because you'll come upon somebody that says, hey, I like that guy or I like that lady. I really understand what she's talking about. And I'm going to follow her and I'm going to do everything that she says. Right? That's confirmation bias because all of a sudden your antenna is just going to focus on what she was saying or he is saying, and you're going to miss the bigger picture. It will happen every single time. So this is an opportunity for you guys to really get educated and understand what's going on, and just don't follow the herd. Don't get your information from Twitter. And if that means tuning me out, that's fine, right? You have to do whatever you have to do to get your own independent view on what's going on. Write down a plan, understand what your risk is for every asset, right? So I love days like this because it makes people like sit up and pay attention and get rid of their complacency. So again, everybody calm down, right? This is our Kevin Bacon moment, right? Everybody calm down, all is well kind of thing. But this is a period of opportunity where the average retail trader is going to stick their head in the sand and go, oh my God, please tell me when it's over. And the professional is going to take advantage of that. So that's my points.
So Doc, I think the number I'm seeing over and over again on Twitter is 8,500, and that's that's our bottom. That's what's going to happen. And I'm like, all right, okay, maybe this is such a like this market's so thin right now that maybe it's going to be a self-fulfilling prophecy or whatever. But like, what's your take on it? Let's do some charting.
Well, let's do some charting. Okay, so let's see if I can get the numbers right here. All right, so I'm just going to flip over, and you can't see this, Mav, because I'm going to do this behind your back. But this is the S&P 500 today, and notice this is all-time highs. This is the all-time highs, just above 3,000 on the S&P 500. So big whoop, big red candle today. It's not like it's the end of the world, right? Tops are a process. It's going to be quite a while before this thing really starts to tumble. And we're going to see a lot of volatility. Markets go from this period of quiet and trending into sideways and volatile. So usually the first thing that happens is we get markets that are doing this kind of thing. So they transition into getting very, very loud first, a lot of volatility. And so that's the first thing I would expect to see from this, is not necessarily, everybody right now is just waking up to this going, oh no, we're going to go down to 2,200 on the S&P. So I don't see that happening. I don't see that happening until we get the volatility picking up. Now, if we switch over to Bitcoin, this is my read on Bitcoin. We have range expansion going to range contraction. We are just now getting to the point of getting the weekly chart charged up again, ready for the next trend. So of course, yeah, there's going to be some moves inside of there. Let's go out to the weekly chart. The weekly chart is just getting to the point of working off this move and digesting this move. We're almost there. It's almost there. So to me, that's okay. I still stick with my pivot at 9,100. That has worked so far as support. It's been tested several times. So 9,100 could be the short-term support for today. 8,500, I don't know where these guys get these numbers from. To me, I believe that half of them are rectally derived. But, nobody knows what the future is going to be. And it's all a matter of identifying support and resistance zones. This, to me, 9,100 is probably the bottom of this move for now, if the trend line does not catch this thing and send it higher. Okay, so let's do this. I'll go back to, there you go. You're back. You're back. So let's see the bottom was my last purchase at 9,100. That's the power of understanding price action, that's a swing test. Institutions are hunting stops. I would not be surprised at that. So what happens is people get very nervous during times like this, and this is where they lose a lot of edge because they use market orders. Never, 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 never use a market order, because you become your worst enemy, your own worst enemy when you do something like that. So just be cautious, guys, and make sure you go through your portfolio and you know what your exits are for every single one. That's always my number one rule of risk management, is to understand what your exits are before you have to think about it. You never want to practice defense in times of war. You want to practice defense during times of peace, when you're calm and you can look carefully at your assets and say, you know what, if the price gets down to there, I'm going to take this one off the table, or I'm going to lighten up, or I'm going to remove some of the position. What you never, never, never want to do is, holy crap, the market's down 5% today. What should I do? That is the absolute worst thing that you can do, guys, because you will come to regret it later. You will come to regret it later. So if nothing else, today is a great wake-up call to go through things and just say, oh my God, wow, we dodged a bullet today. Let's make sure I have my stuff in order here. Okay, we got a few more minutes. We'll take some questions.
Yeah, I got two little things to address. Someone asked about bail-ins for banks. My understanding is that bail-ins are, after Dodd-Frank was passed after the 2008 crisis, they eliminated bailouts, and so bail-ins are when you take away from the debt on the table to pay. To me, that's just it's spreading around what's already out there. I don't know. It's more of the same, basically. It's really I don't know. I don't like it. Definitely, to me, just speaks that it's going to be more of this race to the bottom kind of environment, and it's going to make gold and other, like, hard assets like that just more desirable. So that's definitely something to I don't know, bear in mind. Another thing is this sort of sense we've been, I don't know, some people have called us out on this for our past couple streams, or we keep getting called like BTC maximalists. I want to address that really quickly because I like Bitcoin. I also like a lot of the altcoins out there, but you guys have to understand what the larger market is right now. We're not just out there shilling Bitcoin because, screw those altcoins. They aren't anything worth investing in. That's not it. What is clear to us right now is that we're on the precipice of a recession or recession-like qualities in the larger market. And at that time, that is when the largest, most developed crypto asset out there is the best investment. And it's clearly proving to be. So it's not us going out there saying, Litecoin sucks, Ripple sucks, that sort of thing. It's us out there saying, in this new environment that we're moving in, remember, crypto assets, Bitcoin have never weathered a recession before. We are moving into potentially that environment. And that's very different in terms of like the overall market than like 2017, the crypto market in 2017, or just anything that we've seen over the last 10 years. So that's our perspective on it. And that's why we really only talk about Bitcoin at this point. It's not us just being like, oh yeah, screw forks. We're not going to talk about any of this other stuff. It's the most responsible thing for us to talk about.
No,
right now.
we do this every week because, and I provide a different perspective than Mav does, because I honestly do not care about any particular coin. I don't have any kind of religious fanaticism towards any specific coin. I don't have any tribal holdings inside of me that says, boy, I really feel good about this coin. I really want to like this coin because I like the founder. I really don't care. I just look at the price, and the price will tell me everything I need to know.
Yeah.
And we do this every day in our newsletter as well too. It's like, okay, what's moving today? And lately, my big thing has been, this is a 2-coin market or a 3-coin market. That's it. Everything else has been garbage.
When we get back to an environment that supports not only the innovation that the crypto market needs, but also like that sort of like, people are just scared right now overall, not just in the crypto market. People are not looking to invest in these little tiny altcoins with the hope of making 1,000 times returns. That was really fun 2 years ago when the overall the Dow was hitting 20,000 and like we were going crazy, and like the sort of overall market just supported that. But now we're in a very different environment. And that's what we hopefully can impress upon you guys, is that we're not out here to shill a certain coin because we are just tribalistic because of that. We're here to help you better navigate the future because, yeah, I understand. Believe me, I understand. Like hedging against Bitcoin with altcoins is cool in the sense of like, well, if I invest in this tiny little coin and it goes up 100 times, then I've made 100 times my money and like, woohoo. But like, that's not where we are right now. And I'm trying to make that like as crystal clear as possible. It's not us trying to talk down on these little coins. It's us trying to say we are growing. We are getting part of the overall global market right now, and this is what you need to be doing to participate in that. Because if you're holding these tiny little bags of these little crap coins, you're gonna miss out. And I'm sorry, but like if you are willing to help, like look and really understand where things are going, then you'll do better. That's just how it goes. So, all right, I'm going to get off my high horse here. I know I'm going to get flack for this, but I don't care. Like, this is the most responsible thing that I could be telling people right now. And I know that. So, all right.
The other thing that we do too is that the derivatives that are out there in the space, so like futures and options, are all based on top 2, top 3 coins. They're going to be on Bitcoin, they're going to be on Ethereum, and maybe on some other coins that are quite frankly very illiquid. So really it's just the top 2. You can do everything that you need to just trading one coin. And this is something I go over all the time in our room, is that you can diversify by strategy and not necessarily by coin. If you've got one coin that's working well, you can not only acquire that, but you can trade futures on it if you want to trade directionally, day trading. You can trade options on it if you want to cash flow it. You can do everything that you need to do based on one coin. So show me another coin that you can do that with, and we'll talk about it.
Yeah. Ricky's right on the money. We're not out here to just say, like never ever buy alts again, because, like I understand, like investing for something like long term, it's okay to go hold some alts if that is your perspective. But for most people tuning in right now, what most people care about right now is in the short term to the medium term, what's going on? Like where is the market going in the interim? And to that end, it is a Bitcoin market and a Bitcoin market only. Maybe Ethereum, maybe some of the other top 5. Cool. But everything else is a speculative hedge, basically a gamble at this point. And that's what I have to be very clear with people. So I'm not out here to hate on Ripple. I'm not out here to hate on like Digibyte or Cardano or whatever you're calling me out on. That's not what I'm saying. I'm saying that right now, today, it's Bitcoin's market. That's it. Okay.
Yeah. Whoever's getting pissed off at us for calling out the truth is clearly overly invested in some coins that are doing a crappy job of price discovery right now. I mean, you can always tell somebody's book because they're going to emotionally tie towards their book. And that's the first rule. You can't get emotional about your asset. It's just an asset, right? Mm-hmm. It's either going to go up or down. Pick the ones that are going up, trade the ones that are going up if that's your game, or learn to cash flow them by futures or options. Don't get religious about this stuff. I mean, we're just here to help people find value in the market that's out there, not the one that we wish was out there.
You guys are great. I love getting on with you guys. It's so much fun. We have the best conversations. Like,
wouldn't this be fun in person? I mean, it's like, can you imagine this? We have like a big round table. It's like, okay, everybody drink every time somebody says Bitcoin.
Yeah. Yeah. What do we got some events coming up. I just got my press pass. I'm going to be at Asia, Singapore. So I'm really looking forward to that. That's going to be fun. But Doc, where are we going to be in a couple of weeks?
Well, apparently I'm going to be getting a haircut according to Future Book. Shave my head. So yeah. Sorry, can't agree with everything that everybody says. What would that get you? We are going to be in Bali with the altcoin magazine, which is, oh, I wish he would make this easier. Do you remember what the URL is? It's
Mastermind.
mas- mastermind dot
I don't know.
events or something like. If you just Google altcoin magazine mastermind event, you guys can find
Okay.
out information on it. So we're going to be in Bali beginning of September, and we're going to be doing some live events that are out there. We're going to be meeting with a bunch of other influencers and see if we can influence and be influenced by what's going on out there, and see if we can bring some value to you guys by having a different perspective. All of us, we all live within our own little information bubble, and I think it's always good to get a different perspective on things, especially one that's international.
Yeah. Um, I, I think it's going to be great. We're also doing the 18th, 19th of September in Philadelphia. We're going to be giving a free trade workshop for you guys. So if you live in the area, we'll get on our free newsletter. We'll send it out on there. Um, Otherwise, it's but like yeah, we're doing this in collaboration with Coinvention, which is that weekend in downtown Philadelphia. It's a great event. Like love what those guys do. They're really awesome. So that's our this sort of like travel schedule and that with what we're doing right now. Unfortunately, I couldn't make it out to the Futurist conference that's going on in Toronto today, but I hear it's like a pretty good time. So yeah, there's still cool stuff going on in the crypto space. And like if you haven't done a conference like that before, I highly recommend just like getting out from behind the keyboard and just like coming out and meeting people that are part of the crypto space. It's so awesome because you get to you get to have all these tribalistic like discussions in person, and it's nothing better.
Lovely. Okay. So, last questions. Any further questions out there from anybody else? Anybody else that can behave themselves that has a question?
Mm,
Thank you, Ricky.
yeah, yeah. Martin brings up the point about how, like, guys, remember there was like a year ago, like how much ETF fever there was, or just like how it was. Oh yeah, the ETF is going to define or legitimize the Bitcoin market, and like, look how little that has actually done for us in terms of the the last year. We just had 3 ETF proposals like suspended or delayed or whatever, and like who cares? So I know that there's this pressing need to legitimize or institutionalize the space or whatever, because like it or not, our competition. I wrote about this in our Omnia newsletter yesterday. Our competition right now is sort of these new age like banking
Sorry,
solutions,
guys.
like Monzo and Revolut, and these Apple Card is another good one, and then Libra too, the corpo currencies, that are coming out. Like that's our competition right now. We're not just competing against like traditional brick and mortar banks. We're competing against people's experiences, the user experience of interacting with financials and all that sort of stuff. Okay. Yeah, I don't know. So, anyways, yeah, don't want to harp on that too much, but yeah, it's we're in a really interesting time. I don't get afraid for this market at all. I think we're right in the right place at the right time, and we are building the right sort of environment to hedge against global risk, to provide something different, to provide something of value to people. That's what I always come back to. So buckle up, guys. It's gonna get really interesting. I don't know.
Hey, Mav, what is the event that I'm giving the presentation at
Oh,
in Philly? That is what, Coinvention?
Coinvention, yes.
And that is the evening of September 19th. So it's in Philadelphia, and I haven't written the presentation yet, but I'm sure that it will rely on current events to keep current. We'll tailor it towards what's going on at that time, but we're going to
Yeah.
be giving a live presentation there in terms of just trading in the crypto markets. So hope to see some of you guys there if you can make it.
Yeah, we'll have more details as we get closer to the event, but it'll be on Eventbrite, so just use that to sign up, and yeah, it's gonna be fun. So yeah, September 19th, that Thursday. I think it starts at 7, and should be about 2 or 3 hours. We'll try to make it fun and engaging, and make it for any type of experience level. Yeah, it's gonna be a good time. So, anyways,
bring drinks. The more you drink, the funnier I sound. So
yes.
All right, guys, we are going to say goodbye for now. Thanks for hanging out with us tonight, and we will be back here next week. Don't forget to join us at Omnia. So go check out Mav's link, readysetcrypto.com/gold for your master plans out there. Take care, everybody. See you, folks.
Cheers, guys. Stay safe.